out. This meeting is live streamed. We got it, YouTube. Thanks, Zoom. Appreciate you. Done. Redirecting to YouTube. Here we go. Here we go. Let's kill that audio on the old tubes. Twat now and tweet now. Boom, bam, boom. All right. Yay. It's here. I think we've all been waiting for this special pod since probably some point Friday afternoon. So it's your homies, Nick, Jeff, DI, Gautam, GP, Gpiza, and your friendly neighborhood Swedish chef and host Bags. We're here. It's all family, but we might cuss at each other tonight. I don't. we'll just play it by ear, see how it goes. So I'm just going to start where it seems like we always do every freaking week, with a little chart of the S&P 500. And then like 2 minutes before we go on, somebody's saying something slick. And then that's how we go with the show. So that's what's going to happen per usual. Nick, you were saying that you're a little bullish.
I mean, I am in terms of, I think this is what we are. I think this is what a lot of people have been waiting to see. And
how do you mean?
Like, let's just say hypothetically we do leg down. Like the end of the world shit that you're seeing is like what you see at the end of a bear market, just in my opinion.
So like a big weekly breakdown and then a catapult higher, and bears are covered in their miserable crying bloody tears because they got kicked in the nuts.
I'm not subscribing to absolutely.
You're not subscribing to Michael Burry's end of the world, short on everything except a private jail stock.
Yeah. When I look at a chart of the SPY, like the SPY.
Yeah, I'll pull it up.
Yeah, I completely, again, we've, in terms of kind of the indexes, can you like condense it so that we can see back to like basically like 2018?
Sure.
While you also do that,
just tell me what you want.
Well, here, let me share my chart real quick.
All right, we can do that.
Throw up the link I sent you as well, Bags.
Well, one at a time. We only share so much shit.
I know.
Right now, Nick's going to be the driver.
Fine.
So we have a chart of the SPYs, right? Like per past conversations, I'm largely ignoring a lot of this and even that. I'm more paying attention to this, and to right here. That's where I kind of view as like, again, like let's say we leg down for whatever reason, like this is kind of the magnet where I would think that we were heading, and I would be a long-term, like I would be a huge buyer if we leg down.
Here. Actually from the top, what's the total percent down to that 295 mark? I'm just curious if you can measure that for me real quick.
Shoot, I don't even know.
I can do it. I still got it open.
From 37%
to 295 is roughly 38%. Yeah.
Yes, the 38% retracement.
I'm still, again, like kind of watching this big long-term trend line.
Honk up a 38% retracement, GP. But anyway, go ahead, Nick. Sorry.
No, I was just saying that I think this is what a lot of people have been waiting for. Like whether, first of all, none of us can tell the future. And like
first, you're not saying that there's going to be a 38% retracement from the top. You're saying if there was a steeper drop, 295 is where you'd want to be interested.
Yeah, just aim for 300.
But you're bullish. So why are we talking about 295?
pull up Tesla, for instance, kind of the same thing. Like all we did was basically retest the neckline. So if we leg down, again, that's kind of like where we're going. You pull up Google, basically same thing. You can kind of draw, you got your trend line here, trend line there. Again, if we leg down, we're legging down into such massive support that I don't know how you couldn't be, even if you're long right now, some of these bigger names, like I'd be DCAing into every single one of them into the, like, again, Google right here. Like that's basically where I'd be looking to load the freaking boat. Long-term bullish, what we see in like the next coming weeks, months, like I couldn't tell you, but I'm definitely much more bullish than I am bearish.
But Nick, I thought Contagion was gonna spread and we were gonna see a worse collapse than 2008. Why would you be buying those levels if that's the narrative?
I don't think we're going there, honestly.
Okay.
I mean, test the lows, sure, maybe. Again, if the lows get taken out, yeah, sure. I think this is a big pocket right here. I don't think this means anything really. Obviously, it was kind of important here. We bounced and kind of held this kind of pivot high right there.
Yeah.
But again, like I'm kind of ignoring that because it was kind of like I don't know. I kind of view this as kind of like an outlier event. Yeah. This is much more important to me than any of that.
So again, you were bullish and we're talking bearish scenarios. I mean, if we want to go on the full bullish train, I would say pass the mic over to GP,
Yeah, sure. I mean, I think a short-term bearish scenario would be a long-term, like massively bullish scenario. So yeah, you can switch the.
All right.
That's just kind of where I'm sitting.
No. Nick, I like when you share with us. I'm not trying to cut you off, but
yeah,
we're talking about 295 when you're talking about your being bullish, and I don't think 295 from here is bullish.
Why?
I mean, if it fell down there and you were able to buy at 295, I think that's a great spot to buy.
Sure.
If you're betting on price action to decline down to 295 from 385, that's bearish until that happens, right?
Until it happens.
Right. Yeah, and that lines up with the 09 trend line as well, right?
Yeah.
295.
I mean, you also kind of have this kind of, again, inverse head and shoulders kind of looking like imagine if Zor Trades, I think it was, posted something like in the event of a gap up tomorrow, like, are you a buyer, are you a seller?
Oh, we're gap up tomorrow.
If we gap up, I'd be in check mode. Maybe on a day trade side, like it might be worth shorting. But if we gap up, I think this candle is going to look like a spike low, and we've got the inverse head and shoulders. And again, kind of watching that.
I mean, I'm just going to go out there and say it. If we gap up and close strongish tomorrow, I think you fade it. I'm not saying you fade it to zero, but I think you fade it. Anyway,
you have CPI. You have CPI on Tuesday, though, right? Which, as you know, when news comes out, it can go any way, right? Zero DTAs take over.
GP wants me to share something else on screen, so let me pull that.
Can you guys hear me?
Yeah, we can hear you.
Okay.
I'm just putting up the link that you wanted me to put up 5 minutes ago. Unless you don't want me to do that anymore.
No, I'm just curious on where you think we are in this cycle.
Where I think we are?
That's right.
I don't fucking know.
Scroll down a little bit.
Oh, in this cycle.
In this cycle.
Oh,
B.
Yeah, I think we're somewhere. Yeah, I would agree. You said B?
B is in bags.
So we're in a version. So you're buying the lows here and then going to see it returning to confidence.
I mean, I said on Friday I went long some things, and I also covered some calls on some things. So yeah, I mean, I'm not saying that I know which way the market is headed. I took some longs that I thought were a good spot to potentially add on, that if we keep going lower, I can cut pretty easily. And I covered some calls because maybe we do fade like I'm saying that we might, right? So I still think we can chop here. At 285, like 288 was kind of 385, 388 was kind of like the line in the sand for me. Like we're just below that. We undercut pivots all the time to see them bounce above, or we overshoot pivots all the time to see them fail. So I'm not going out there with every dollar I have and say all in on puts or all in on calls, YOLO that shit tomorrow.
Right.
But I would say from this sentiment cycle, we are probably closer to B than we are any other point in that cycle.
Definitely not G.
Now, where we are in B, could we be the beginning fall off of B and we still have some further B to go? Absolutely. Right.
Yeah.
I don't know. That's why I'm asking you guys, because to me, we're in C, right? Where
Okay.
So like you had the move up, right, to the anxiety level, and it got faded hardcore, right, to the levels we're at here. Everyone in January was like, oh my God, it's anxiety. This bull market is like with macro backdrop. There's no way. No one wanted to get long towards the end of January. Like, this is just too much. It's all going to get faded. And what did we get? We got the faded, and we got to the aversion phase, right? So
maybe.
to me, that you
Yeah.
guys,
Yeah.
yeah. So to me, you had that aversion phase here, and then we have in this kind of cycle out of the denial phase is, I don't know whether we're above that line or below that line for the denial phase, but to me, we're in that kind of denial phase here, that we're on the way towards. And like, the reason I say this is not because of this stupid chart here, but because of the things that I've been watching, right? Like the dollar dying where it's supposed to, the rates that are dying where they're supposed to. Literally, everyone's talking about, like, say, for example, right, the dollar is bullish for whatever reason, but it's the exact same chart as the Qs of 2022. And you have a bear market rally in the dollar, and everyone's calling it a bull market rally to move forward, right? So if I've been in this camp that it's going to come back to this level, the 200 day, and then reject it. And then not only do we reject it, we've rejected it pretty hard, right? And then rates got absolutely hammered on Friday, and bonds are starting to come up. And you can argue that bonds are now the recession kind of apocalyptic safety space, right? And that could be the possibility. But all the things that I thought were going to happen happened, except for one. And the one was the price action on Thursday and Friday, the 2 days, right? And that was selling off stocks throughout. So I'm pretty confident that one of them is lying. And I think it's the equities market here, right? In terms of the bond market is telling you, which is trillions of dollars of assets, multiple sizes than the equity market, is telling you everything's going to be okay. The investment grade LQD, investment grade corporate bonds, barely flinched and actually put in a pretty bullish day on Friday as well. Junk bonds barely came down on Friday. You have contagion risk, you have financials starting the next leg lower of this entire market from 2008. And junk didn't die, right? You would have expected junk to die there, but it didn't. It was down 0.3 cents, right? I mean, it was down 3 cents on Friday. So you had no follow through there too. You have the financials that are sitting above a 13-year consolidation, right? And you have one bad candle. It's the same concept. I thought it was checkmate last week when I had one great candle, and then you have one bad candle and everyone's saying checkmate. So to me, all the things that I've been watching that have kept me in the bull camp all are playing out, except for the weekly candle on the Qs, the SPYs, and the IWM, which I know it's big because you're supposed to follow price action and nothing else, right? So, but everything else is telling me that we're okay. Look at Dr. Copper. Dr. Copper is doing pretty damn well. It's sitting above the 50-day moving average. It's consolidating in a tight tight daily flag. There's a lot of stuff for me that says that the anomaly was the last 2 days, not everything else.
We gotta wait and see. I don't think I can tell you. Based on I'm going to pull up the ABC chart. I was doing some things while you were talking there,
Yeah.
GP. So this is where you're saying A is. This is on the daily chart. So this is your A, then this is your B drop, and then this is your C sort of U-turn back up.
Yep.
And I'm counting, and maybe maybe Nick is counting this as the same. I'm counting this as A, and then this is B, and then this next thing is C. That's the way I interpreted what you put in there. But I'm not saying you're wrong. I mean, we don't know, right? Like we're making our best rational positions and our bets, right, on what we see our indicators and different equities, treasuries telling us. Nick, you're saying.
But everyone's saying the same thing though, right? Which is we're sitting somewhere between the next level higher, maybe from a little bit lower.
I don't know.
From here.
Yeah, I don't see too many people in my camp being like, I don't know what's going on, and I'm just going to trade it how it comes. And I see a whole lot of people saying this is the beginning of the crash, and then I hear a lot of people saying this is the rocket ship to the moon.
Oh, I didn't hear anyone say that.
Yeah,
well, you and Nate are bulled up, nasty Nate. I know Nick came on bulled up until he said
295.
I wouldn't say this is the rocket ship to the moon. I'm kind of in agreement with you. I think if we continue just a little bit lower, I think the 370s is kind of where we're heading, which would be right in line with that kind of longer term trend line. And that's where I'd like to see a higher low get put in. I think if 377 gets taken out, you're going to see even more people calling for the lows to get tested, lows to get taken out. And until the low gets taken out, I'm not calling for a 300 test. But if 350 does get taken out, that's again, 300 is the magnet that I think is going to be coming, and where I think that we would be putting in a very significant bottom.
If or when we take out those lows, right, Nick?
Yeah.
The move down is going to be swift. It's going to be a couple of months, and it's going to be dead, right? Like
every bit of it's going to be it's going to be the tail end. It's exactly what happened in 08, 09. And that's when all of the news shit's going to be coming out. The Fed's going to be slashing rates. There's going to be all kinds of, that's when all of the, right.
Yeah, when it breaks, it's dead, right? Because everyone who's been buying the bull kind of thesis, right, and loading up, DCAing, that's their point where they start to get out. And so what happens is that's an accelerator, because a lot of people already got out near the top or around whatever level is up above. So if it breaks that low, that next leg lower that's what everyone's waiting for, because that's where they can actually make real money buying puts versus getting slashed to death or zero DTing. That's a different story. But anyone who's buying longer term puts gets whipsawed just like longer term calls.
I've been all right with 2 weeks and a month out. I mean, I know you've been shitting on those for a while, GP, but I've made pretty decent coin over the last 2 months. You just gotta know how to trade them, right?
You can make a lot of coin in this market, right? That's not what I'm not saying here, right? But most people who are investors, not you bags, people who are investors are not buying 2 week out puts.
No, they're not.
That's not how it works. The VIX is calculated based on 30 days out for a reason, right? People aren't active investors or traders within their investment profile. Most people are passive, right? They just sit and wait. So, they're like, oh, market's going to crash. I'm going to buy puts like 6 months out, right? That's what
I'm going all in on a 2-year bond portfolio. I actually thought about that yesterday. I'm not gonna lie.
To me, I don't. So like the thing that's been ringing in my head all weekend has been like, how is Google, Microsoft, Apple, Amazon with these cash piles? Maybe not Amazon as much because their cash pile isn't that big, but those 3 other names not king of the damn hill over here, right? Because I was looking at Google's balance sheet over the weekend. They have $20 billion in free cash just waiting there to be used, right? 20 billion. This is, I know it sounds like an arbitrary number, but that's a lot of money. And then they have another 100 and I think $19 billion sitting in marketable securities. And marketable securities are typically 3 to 6 month treasuries, right? So if they need to liquidate, they can liquidate. They won't have a bank run. So Google itself is sitting on 100 and nearly $40 billion in cash, right? So to me, I don't know how you like Google's been terrible, and the chart doesn't look great at all. So don't get me wrong, but how are you going to get another 30 to 40% down? To me, is when you have that kind of backstop in so many of the tech companies. And if you think about it, they went and did what you should have done, which is they sold debt at 0%, right? And they kept all their they had to, and they can because they don't have all these bank regulations. They can keep their cash available in short-term securities.
We talked about this last week. I don't. Google's chart has been abysmal for months, but I don't hate it right here, honestly. I think if I actually considered giving it a shot on Friday. So I think in this high 80s, low 90s range, I think it can be tradable. And if it sticks, I mean, that's a great place to buy for a long-term bet if you're into that type of thing. And I almost pulled the trigger Friday. I didn't. I went some more Amazon. I sold some puts to open on Alibaba, actually. So
I like Baba, right?
I made some bets. But then I covered some calls. I covered some calls on Cloudflare. I covered some calls on AMD. I covered some calls on SoFi. So I was active Friday. I see those types of candles as things that you need not panic, but you should probably be ready to take action, or at least that's the way I look at it. And that can be opportunity. But you got to know when you got to stop out, if you got to stop out, in my opinion.
Yeah.
I'm not terribly bearish right now. Like I've seen what everybody's putting out there too. And yeah, probably 70% of the 100% of the two camps is definitely crash is coming, crash is imminent. I'm tired of seeing all the analogs. You guys know how I feel about the analogs.
Yeah, I
hate them. Like, I've proven this time and again that we can take random points on charts and just make them look like they look like. So I'm not buying that shit. Can it play out? Can history sometimes rhyme? Of course, but I don't buy that. We're in different times. We've talked about this on the pod, right? Like, yeah, if banks continue to fail, yeah, we're in another great financial crisis scenario. But there's a lot of things that were put into place after 07, 08 to prevent this. And I think that's what happened earlier this evening with Silicon Valley Bank.
But they're not buying worthless paper, right? So this is
right.
This is where my logical side of, wait, you're telling me a bank failed when they bought U.S. Treasuries, but they just bought the wrong duration based on their short-term deposit requirements, right? So to me, they did a lot of things wrong. I'm not arguing that, right? What I'm saying is they didn't fail because they made investments in things that were levered 11,000% like 2008. This was U.S. Treasuries. So like I found it really odd that no one was able to step in and say, hey, here's a bridge loan. We're gonna fleece you for the bridge loan. We're gonna charge you 30% interest, whatever it is, but we'll make sure you survive, right? I found that to be really odd scenario in the case of US Treasuries, risk-free assets, right? These are if you hold them to maturity, which is where they were sitting, right, in HTM, they would pay out. I think it's a 7-year hold period for them, or 10. I can't remember which one, but they would have paid out that 1.6% every year for 10 years, let's say, right? So you would have made on that 90 billion or whatever the amount was, they would have made an extra $10 billion. But the fact that they didn't keep enough for their short-term depositors and their operations is the reason they're failing. But I'm surprised no one stepped in.
They were nearly 110% off of high risk to deposit base, was what Carl Quintanilla tweeted 5 hours ago. Like, in a league of their own, as what loans they handed out to what deposits they had in the bank. Like, it was, and I don't want to get too political, but the regulations that were overturned, I think in 2019, about what major banks have to do versus what quote unquote regional banks have to do, kind of ridiculous. I mean, you took the guardrails off, so it is what it is. I just think that I'm glad that depositors in SVB are getting their money, and the shareholders and everybody else who was involved in the bullshit, it's going to zero. It's not a bailout. So anyway.
Yeah. But what I find in my, I guess it's the right side of the brain, my logical side, people calling for the end of the world because of this scenario, which is a timing issue ultimately. On a lot of banks are holding treasuries in their HTM portfolios that are underwater.
Yep.
Right. It's not just like, obviously JP Morgan has, but JP Morgan's Candle Friday is a big tell to you.
And there was a huge amount of volume in that son of a bitch right there. Look at that.
It was insane. Right. So like that to me was enough to say, this is stupid. and also at the same time to say, this is momentum, right? This is zero DTA. Don't get in front of this and try to buy the dip, because they're going to rail it all the way to the floor if they can.
That is one of the greatest green volume candles it's had since November 2020, before it went on its run. I think that was an earnings date right there, maybe.
Yeah.
Anyway,
JP Morgan.
But one thing that we shared over at Charts for Charity, I know I posted a whole ton of charts over there. You know what doesn't look bad? The Qs. Like, I don't
So
think.
when I was talking about the reversion cycle, by the way, I was referring to the Qs, not the SPY. I know we were talking about the SPY.
Fair point. That sucker, look, I mean, could it go further down? Yes, it could. But that looks like it might be ripe for a bounce right there. You close into the 50 on the weekly side of things. You've got those moving averages right there, support. You're squeezed down by the 50 weekly. RSI is ready to go back up right here. Stoke could go back up to. I think that this could be one of these guys. I used to love to say this back in 2020 and 2021. Little flag above the moving averages. We haven't been able to say that in 2022 very often, and 2023, but we'll see. Little flag above the moving averages. Let's see how that plays out.
So you have the dollar, which is a headwind, bear flagging into a key moving average, and then you have the Qs that are bull flagging in right around a key moving average, right? Like it couldn't be a better picture to argue both sides.
I mean, how
All
good-
right. Yeah.
I charted that pretty well, I think. That little support zone right there, the little range. I'll pat myself on the back. I can still do some work when I want to.
We've been talking about dollar for a while, right? At least I have been, which is the weekly moving averages have been rolling over for weeks, right?
Yeah.
And you have a rally into prior support, and I think the RSI hit nearly 70 to get all the way back there, right? Not even back to all-time highs, but just back to where it kind of started breaking down.
Yeah, I mean, I think you run it back down to here at least.
92 is where I'm thinking, right? So
yeah, you could get down there for sure. I'm saying like 101, 91, 102 ish is the pivot. Below that, yeah, you're probably not stopping until
the 200 week.
Yeah, you're down there.
Yeah. So maybe 95 is it? Sorry,
97, 81 is yeah, that would make sense. Let's mark it. Something like that, probably. Yeah. That would make sense to me. And that would be extremely bullish.
That's a tailwind for tech, right?
Like that would be extremely bullish for you name the tech. Fucking Unity software. I mean, just T-Doc, blast from the past. No, I don't know if anything can save T-Doc.
No.
No, I'm just saying, like, almost anything that has a ticker should be able to rally on a dollar that goes another 6%, close to it down.
Yep. And then you have look at what TNX did. That was ugly. That on the daily looks a lot uglier than it looks on the weekly. Look at that.
Yeah, it's a huge gap and crap in it.
So like
I always do like when I have converging lines though. So something into that like 3.5 might be good for a bounce, but we'll see.
Maybe, but ultimately what this is to me, this is the same kind of pattern in 2022 for the Qs, made incremental highs on the weekly, because Qs did it too. Qs did it in March of 2022. They closed above the prior high at 370 at like 371, and immediately the next day it was downhill from there. And then we went down 24% in 6 weeks, right? So yeah. TNX very similar, made an incremental high on the daily and then boom, immediately reversed lower.
Hey, our homie Bihanu wants us to look at gold, and I gotta be quite frankly, I haven't really looked at gold this weekend, but we'll look at it.
I like it.
My gold thesis has always been, Nick.
I know.
I
knew that's what he was gonna say.
You want the GLD or you want something else, Nick?
No, I like the GLD.
All right.
I mean, I think if you want to front run GP, I think 182 is your trigger. So, or your pivot point. But again, at that point, why not just wait 10 points, another 10 points, and buy the all-time highs to GP's point?
Yeah.
I'm just saying, I think that you could use that 180, 181, whatever, as kind of like a, I think you could use it.
And so here's why I say wait, and I'll give you the psychology behind it, right? Is what's going to happen most likely is you're going to get bulled up, it's starting to move, it's going to fail, it's going to come back down, you're going to end up just liquidating most of your position and keep a small position, and then it breaks all-time highs, goes to 300, and you're like, crap, I didn't have enough, right? Because you've been so mentally worn out by the gyrations that it's hard for most people to be fully engaged on when the move actually happens. Right?
I just hate buying the middle of one of my range boxes.
Yeah.
Like I just hate it. Like I would rather buy, like you said, Nick, once it goes above it or the bottom of it. I hate buying the middle of it. So that's me. It doesn't mean it can't go higher. It's actually poised pretty good right here. but yeah,
Yeah,
I would say the gold play would be partially betting on bank collapse, right? Like if you're extremely bullish gold, you'd expect.
Nope.
Maybe.
Gold got smoked when banks collapsed.
Okay, so there goes my thought.
In 2008, gold went from, in March of 2008, gold went from 100 high, 100.44, all the way down to 66. So 34% it lost
Well, let's
in the bank collapse. So did it collapse less than bank? Sure. Cash is still your friend if you have a collapse like that.
Yeah, I mean, it held up better than the XLF, right?
Great, but what did XLF do after?
I mean, from top to bottom, it was 33%. And we'll just take the same time frame in banks. I mean, you got 80%. So
no, but so if you bought on March 9th, if you bought gold or if you bought banks.
Oh yeah. Either way, you're fucked, right? Like but I would rather lose 33% than I'd 80%, right? Like,
no, I'm talking about when it bottomed, right? Once, like that's why I say cash is better. And if a collapse scenario happens, cash is better because you get an opportunity to actually assess.
Oh yeah, I'm not arguing that cash is not better than gold. I was just thinking that gold should be bullish if banks suck, but it wasn't.
No, there is no safe asset if there's a collapse. There's literally, outside of maybe treasuries, short-term treasuries, there is really no safe asset when there's a collapse of that magnitude. Everything gets sold, whether things get sold 30%, 80%, whatever it is, everything gets sold because people are worrying about feeding their families, not whether they can buy a house for cheaper, right? That's our scenario right now. 2008, people weren't sure if they could feed their families. 2023, can I get a price cheaper on the homes that I'm trying to buy here?
You got to feel changing.
Go
ahead, Nick.
I was gonna just I pulled up like Toll Brothers. I was thinking about real estate after you kind of said that. Well, what are the other ones?
What's some other real estate or
yeah?
builders?
Is there a good real estate?
Lennar,
KHB,
yeah,
KB Homes,
Yeah,
KBH, I think.
what's it? The XH Home Builders. Yeah, XHB is the ETF. Woof.
What is the 30-year at right now?
It's down.
US 30-year. That's not it.
7.34. Is that accurate? As of March 10th.
The mortgage.
Oh. 7.3.
So the other thing that I noticed was, I know a lot of people don't like to use volume, is in XLF. Where was the volume? Right, like comparatively, like yes, it was a lot for the last 12 weeks, but there wasn't a lot on a weekly candle from something that people were worried about: contagion, fear, bank runs, all that other stuff that all these guys were talking about. I you know who I actually appreciated on Twitter is Dan Loeb. It's just
he's a good dude.
Yeah, it was really nice to see him. Like, you know, now people know which VCs will step up and back you, right? Because they issued zero. They came into their startups or in their incubators and pretty much said, "We got you for payroll. Here's a 0% loan until this gets handled," right?
Uh-huh.
And that's what should happen in moments of panic, right?
Let's say we start to leg down. And you're currently pretty long. Are you liquidating positions or are you hedging?
If we break the lows, I'm out.
Yeah.
Okay.
There literally is not even a question, because if we break those lows,
It's ugly. We've talked about this. It's ugly. It's a shit show.
Yeah. So yeah, to me, it's like, if you are only down 30%, then you're probably in good position to have cash available when you get the another 70% down, because indices might go down another 30%, but
Equities,
stocks will get clobbered.
Yeah.
Right. So, and if you're looking at like the mega caps, right, those ones that were acting kind of really weak for a while, like Apple doesn't look bad.
No, it just
We
looks
talked about
like
that
range
last week too. Yeah.
It is, what is that, 1, 2, 3, 4, 5 straight inside weeks off the earnings.
Closed out above the 50 weekly.
Yeah.
All the moving averages are wanting to move higher. Yeah, it doesn't look bad.
Doesn't look bad. Microsoft doesn't look bad. Google,
Mr. Softy does not look bad at all.
Yep.
So these are two charts. I also looked at Mr. Softy and thought about adding some there. But I was saying earlier, and I've said before, I like buying conversions. And while this isn't a conversion of my lines, like, this has been pretty good support and resistance. And as a perfect bounce off of this back in June. And I thought that was probably the bottom then, and it was. And I lightened up here. But once I saw that playing out Friday toward the end of the day, I was like, I feel like I got to take some shots, and it's okay to be wrong. It's just not okay to stay wrong. So I wanted to put something on the line, and I did. But I kind of like it. And as I was scanning charts, like, Mr. Softy doesn't look so bad. We already talked about Google. Doesn't look so bad. Everything's in perspective, right? Like, of course,
SMH doesn't look so bad. No, SMH. Semiconductors.
Yeah,
it didn't have a great week.
It keeps
it didn't have a bearish
down here, though. I mean, I feel like we're in the gold conversation, but with semiconductors, right?
Possibly.
Like it keeps getting slapped down around this 246 mark, and I would feel much better above that. But yeah, no, it doesn't look so bad, but I'm not convinced that it's got enough chutzpah to go on higher.
Yep.
Right now.
Shop
tomorrow.
Shop, which is one of the first to always die. Shop, not a bad week. Right? Like,
all in all,
it's holding the top part of the base.
No, it's not too bad.
It's holding the top part of the base that it formed over last year. It's doing well. So to me, when I was talking about the sentiment cycle, I'm referring to the Qs, because Qs are showing relative strength to whatever to everything, right? So
and let's flash back to the risk on, risk off asset, right? I've said it for 2 weeks in a row now. This will be the third week. Monthly doji. What are we going to see the fuckery on? From 20,000 to 25,000. We undercut 20 a little bit, but basically 20 was where the bounce spot was. So I
think Ethereum looks fantastic.
Yeah, I think Ethereum looks better too. I actually added some to the Bags Brothers portfolio.
Yeah.
Nice.
So
Roblox looks pretty good to me.
Roblox. Yeah, I think it does.
Hey, GP, were you worried about your Roku at all?
No. Like I said, like, tech, which let us down, is now in here this cycle showing us relative strength.
You still long Roku?
Me, yeah.
Okay.
Hey, we didn't bring up drugs, by the way. I was curious
Yeah, let's talk about those fucking drugs.
You
Those
asked on
biotech
StockTwits
shits.
how we would feel if you sold your whatever, and I said yes.
Yeah, you told me to sell. You told me to sell. But for months, you've been like, oh, I like biotech. Oh, I like
did.
biotech. I like biotech.
I did. And
Right?
I did. I mean, I still think drugs
I mean,
are
you
going
may as
to
well
be...
went from doctor's office to doctor's office, shilling pills out to the offices. Like you were on payroll, Nick. So don't start with me. But yes, it has been miserable from the moment I added into it, for sure. Sometimes I just feel like that I'm not meant to be in certain positions, and this might be one of them. I don't know. It is holding,
like me in commodities, basically.
Yeah.
Absolutely.
It
Oil is terrible. I will never trade oil.
It closed where I needed it to close while it's ugly as fuck close. Had it closed anything under like that 74.80, more closer to the low of the day, I would have probably just dumped it. But again, not knowing what was going to happen over the weekend, I stuck it out. And I'm not saying that all of a sudden we're going to trampoline back up over the range here.
But we are.
But weirder shit has happened. Weirder shit has happened.
No, it's called the spring, right? So you have like, to me, in XBI, that was an ugly candle, no doubt, and pisses off everyone, right? And everyone's like, let's screw this. I think even Duzio was like, screw this. And that's what that candle is, right? That's the one that wipes out everyone after months and months of, and then what happens, right? It's the reversal candle. It's the spring setup. It's the I've been accumulating. I'm going to shake the tree. Let's see what falls out. And
I'm
then
just mad I bought Thursday and then Friday happened.
Yeah, it was miserable. I get it. I'm not arguing it. No one wants to see that happen to anything.
Yeah. No. I'm sorry, GP. You're talking about the spring, and I was just venting that I wish I'd waited 24 hours to buy is all.
Yeah, and to me, it's because I looked at the weekly volume, right? Once again on XBI here is. It's all been a lot of accumulation, right? And then you have this one massive candle on not that crazy volume. I get it. It was only 2 days of fear, so maybe it continues this week. But to me, it really felt like this is the shake before the bake, right? Like this is I think it moves higher. We'll see. That's ultimately what I have my opinion.
Yeah, GP shared a chart on Twitter. Was it yesterday or
charts are for charity as well?
Just how he thinks this is going to turn out. I hope he's right. I mean, I'm not going to complain if he's right, because that would be extremely bullish from here. But we'll see. Time will tell.
If this weekly candle was like some insane volume, I'd be like, no, it's not a spring setup, right? But it's not. It also held horizontal kind of support that dates back not to just this time frame, but it goes back years, right? Like it's not.
Yeah.
It goes back a lot of years, and so the sell into that support tends to be a spring, right?
You're not wrong. You're not wrong.
Yeah. So, and once again, this was on 2 days of we're gonna see 08 again, right? This is if 08 was literally on everyone's minds, you don't think people would have been liquidating like complete assholes?
You're not wrong. But we'll see if you're right.
I mean, in that argument, it'd be it's already fascinating to me how we're going to play out, because if you are in the 08, 09 camp and believe that, then ultimately like this next leg down is the leg down to buy and would be the buy opportunity for the next like 10, 12 years across the board. Similar to buying, like basically similar to buying 2009. Right?
I don't think so.
No, I think it goes a lot deeper.
I think if we have a collapse here, I don't think it stops where anyone thinks it's going to stop. That's my personal belief, because inflation is still sitting in the macro background. This is a completely different time than 08 and 09. You have fairly rich balance sheets in many, many names. I just don't think it's, if it's 08, 09, that was a global collapse, right? It wasn't just the US, it was literally across the world. And as I said earlier in this podcast, people worried about feeding their families? Right now, people are worried whether they can buy a home cheaper.
Right.
That, to me, is that if we do leg down lower, it's going to be not even close to what 2000. I think it's going to be worse, right? That's my personal opinion. So that's why if we break the lows, I'd be out, because I don't see 295 holding. I have been in the camp that if we break lows, right, in this low that keeps not lowing and then keeps lowing, and this range, this bottom end of the range on the Qs or the SPY or whatever, if that breaks, I personally think we go back to where QE, infinite QE started, if not lower.
So, okay.
So if we look at 08,
that's 219 on the SPY.
$219, yeah.
But I
Yeah, I
think it
can
goes
see
lower
that.
than that, right? Because it's a
mean, I'd say-
broadening formation, so it's going to test even lower than that, right? So, I would say probably closer to like the 190 level, but I'm not in that camp, so I
the
don't
bottom
even.
of that range. Okay.
So if you think it's 2007, 2008, we're basically in a spot like right here. So that lower is much lower. If
No, I don't think I disagree with that.
Yeah, well, I mean, if we look at it, like that's kind of where we're at. Like we've come
Look at the SPY chart I
up.
posted on the. I posted a SPY chart just a second ago or a minute ago on the stock Twitters, like
The old tweets.
yeah, I posted like kind of a screenshot of like 0809. Why is it not popping up? It won't get bigger.
Everybody watching, if you have any questions, just go ahead and put them in the chat. We'll try to get to them as we wind down the next 10 or 15 minutes.
If we're looking at 2008, 2009, we're basically like at the low 80s. Basically, we're at, what is that? February of 2009, and we saw 1, 2, 3 more weeks following that. We spiked the lows, undercut the lows, and then we rallied like a mofo. That's where I think we are.
So like if we're like here.
Let's see where.
Yeah, like
exactly.
Yeah.
Yep. Absolutely. And again, like this fall, the news and all the shit that was coming out in that period of time. God, I mean, I remember what I was thinking. I thought the world was fucking ending, and I
mean, it was for a lot of people.
Yeah, I know.
But we're not in that. It's impossible to compare 08 and 09, even if banks are failing or whatever, because that's not where we are as a society ultimately, right? Like
the other one is the analog is, the 2000 tech bubble, right? And this would be your analog of that.
Yeah, and
I don't know why I'm spending time talking about this shit. No, I believe it. So Gaga Papa wants to know about Lulu.
Lulu. I looked at this chart and it's a no touch for me.
It looks like a head and shoulders on the monthly to me. I mean, it's pretty defined.
It's a big broadening formation. It
doesn't look great to me, Gaga Papa. Nick, I don't know if you have a take.
I'm pulling it up right now, just on
the old Lulu for Gaga Papa.
I don't like the distribution that's taking place. So.
Yeah. It's at the low end of the range and kind of sitting on that trend line. And I don't know. There's better setups.
1000%. This is not financial advice. This is our interpretation of what the chart is.
Yeah.
But let's talk about the defensives. XLU dying, XLP dying, XLE slow death.
XLU poo poo.
XLV
XLE poo poo. XLV dirt.
Right. So these are your safety names, right? These are the ones that people pull into when you have all these contagion risk and fears and stuff like that. And instead, they're starting their descent from the distribution that's been going on for a couple of years now, right? So it hasn't broken yet, but it's getting there. It takes time to break these things.
I have not been bashful about saying I don't like XLV for a long time.
Yep.
And I still don't.
Look at consumer staples, XLP.
Don't like it either.
Yep.
Auto Nation's my favorite setup out there right now, I think. Put in a 3-week tight, sitting right on top of a channel or right on top of its base.
Yeah, 3-week tight, 3 WT, 3 wet.
Kind of my focus name at the moment.
Not my jam, but Nick, you trade brother.
Degenerate trade of the week, potentially beyond.
Beyond.
Oh,
that's a name. That's a blast from the past.
Yeah.
Inside off the earnings.
$200 stock, now $17. Woo.
Yeah, inside off the earnings. Pretty decent accumulation volume showing up here.
I might buy a couple hundred shares just so I can say that I'm pro soy. Pro pea protein.
There's actually no soy.
I know, it's pea protein.
Yeah.
Have you ever had
I brought that up because Nick used to like to call us soy boys.
Yeah.
I mean, aren't you a meat eater, dude?
Yes, I am totally.
So what are you eating soy for?
I have a very sophisticated palate.
Okay, fair enough.
What else we got in the chat here? Hey, and thanks to everybody for watching. Hey, do us a favor, like, share, subscribe. It helps us. We like to see more people watching our stuff, and when this comes up, we like it. So it just encourages us. We've been doing this for over a year now, and it's just good to have people helping us do it, right? So we appreciate you. What about Blur? I don't know anything about Blur, Brandon. Blur NFT token, don't know anything about it. Is it even a no clue. Don't know anything about it. Sorry. Can't really help you, Brandon.
CBS looks like hot fire.
Bihanu GP short. Bihanu's like your fangirl over here. Short-term market this week. What do you say, GP?
OPEX week, I'm not making any predictions. I think post OPEX is going to be the bigger tell. If you've seen a lot of our crash cycles, they tend to happen after Feb OPEX and on March OPEX, right? March OPEX is also when Carl Icahn's 3950 puts expire. and he doesn't have any more. He hasn't rolled any other ones. So I'm not making any predictions for this week. I think if you're looking at longer term setups, you have a lot of potentials. All the stuff that I've been wanting to break down is starting to break down. All of the stuff that I was hoping to show relative strength has been showing relative strength. So to me, a week or two of garbage is not the end of the world.
Give me 3 weeks of garbage.
Yeah, I don't really.
Yeah, fuck yeah.
It can into quarter end. It can, right? You also have the JPM
Yes.
collar. Don't forget the JPM collar. That's gonna be a magnet as well. There's a lot of stuff that happens between February and March that's flow driven. That I don't have insight into where that flow is going to be going, and that flow seems to change a lot on zero DTE stuff.
I was asked about NVIDIA. I did close my NVIDIA long position near the high on Thursday because I'm a genius, and my puts were working, but I didn't want to hold them over the weekend, so I sold those for a gain too. NVIDIA has been straight up. I mean, it's parabolic.
And it barely broke down.
Yeah, well, I mean, you're for NVIDIA almost 4% for a week isn't that big of a move, but I've got covered calls against my AMD position, and you guys know how much I love AMD. So coming back to my SMH, like I'm not convinced until it goes higher than the range it was in. So it wouldn't surprise me to see NVIDIA do something like, I mean, you know, something like this, fuck around and find out till it comes over here and then back up, right? Like that wouldn't surprise me at all. I felt good getting out of my position at close to 30%, and I keep it moving. If it gives me an opportunity this week, I'll take it. But NVIDIA has definitely been strong. You'd be foolish not to think it's been strong. Again, something I've been doing over and over and over is a reversion to the mean trade. Something is going crazy to the upside. It's got to come back down to earth. Something gets sold off so heavily, it's got to bounce back at some point, and you just got to be able to have the fortitude to hold on to it, I think. That's my own personal position. That is not financial advice. Hare Krishna, thoughts on First Solar? I don't even think God could knock First Solar off right now. Like, First Solar has been on one of the most amazing tears of anything that I can think of. From the summer till now, this bitch is up 240%. Like,
and in this market, that's nuts.
It's just stupid. It is showing some negative divergence, but I talked about maybe trying to short this pig back in the fall, and all it did was go higher. So I'm not making any calls on First Solar personally until I see a break in character of the price action.
This short term might do whatever, but this is going to take out all-time highs. Like, there's no doubt in my mind that this is going to take out all-time highs.
One of the most amazing moves I can recall. Anyway.
So that's they're one of the best like balance sheets in the solar space, by the way. Better than in phase, better than Ron, better than all. One of the best.
SWAR wants Caterpillar. I'm not a fan. Just me, not a fan. Doesn't mean it can't bounce here, but not for me.
LMT, same.
LMT, yeah.
All right, these are all coming back to the all-time highs and just failing, right? Like, it's just not going higher. So to me, there's wicks. You see how many wicks there are there on that weekly? It's nuts. To me, this is distribution ultimately.
Sure. I was gonna say if
Baba
Caterpillar, not a fan, but like DE and TSCO look all right. I mean, if I like TSCO more than the other two.
TSCO, Tractor Supply.
Can we talk about XOM as well and the breaking down?
XOM.
XOM. We'll get to China. Don't worry. Hari Krishna.
That's 5 straight weeks of red in XLM.
Roll over, Red Rover. Well, we've been pitching the XLE and energy and oil for so long. We got to be right eventually, GP. Like we've been saying.
It takes time to get distribution out, right? So
yeah. Baba, a position that I sold some puts to open in. Kind of like it here. Kind of got one of these going on, maybe.
It looks exactly like NVIDIA.
Maybe.
Do you remember when NVIDIA went straight down for 5 weeks?
It kind of looks like NVIDIA. It looks like right there in NVIDIA. That's not a bad call, GP.
Same fib retracement too, 61.8.
So I don't know if my puts are going to be able to get me long because I bought them for the end of the month, but we'll see. I wouldn't have a problem buying this above this level right here if I had to. But I'm hoping those puts convert at least for trade.
It can get all the way to 73 and still be damn bullish.
Yeah.
That's the crazy part about this.
Yeah.
So to me, this is a good point, right? Because it's 661 retrace, that comparison to NVIDIA. It's on lower volume here too. So 82 is that 82.18, I believe, is that 61.8 retracement of the move from the lows. It's basing at the IPO lows base as well. It's like an inverted head and shoulders here. There's a lot to like here.
I bought the 84 put, or sorry, I sold the 84 puts for $4 and a nickel. So I would own it at 84 or at 80, which I'd be completely happy with to own it at 80. If it goes higher, I profited, 405 off of it, and I can buy it back higher if I need to. But this is not a long-term investment. I'm just being clear. I despise everything with these companies. I don't trust them, and probably somewhere in this 99 to 100 level, I'll probably lighten up quite a bit. Netflix, GP, your baby. I'm not going to speak on it. Well, there's the chart. Anything?
It's in search for liquidity. To me, it's at the bottom of the ascending triangle. I posted the chart on StockTwits as well, I think. It tried to break out of the ascending triangle that I drew, but I drew a bit lower. Did not draw it from the January gap down. My fault. But if you draw the ascending triangle from the January gap down, it touched the January gap down, and it's sitting at the bottom of the triangle here. So it's in a big position here. Otherwise, it goes much lower. You have the monthly MACD cross up, which I'm a fan of, but looking through the history of Netflix and many other charts, when you have a monthly MACD cross, you've never seen 5 or 6 straight weeks of red going into that. So this is in a different territory for me. It was nice to see that it did not break the January lows, right? That's what we've done quite often, especially in 2022, is we go slightly undercut the prior month's lows or prior week's lows or prior day's lows. We bounce a little bit, some incremental, oh my God, and then we die, right? And in this case, on the weakness that was Friday, it got within 30 cents of those January lows, round numbered, and then closed above 292. So I like what it did on Friday, but I don't like what it's done over the last 5 or 6 weeks. But we talked about this last week. I was like, it looks like crap. And I think I got made fun of on Monday when it bounced, but then it died. And I'm long-term bullish Netflix, and I'm still like, it looks like crap. So I'm I'm in the impression that where Netflix goes is where the market goes, and it was one of the first to fail before the market failed, by the way.
If it can give me another 5% off, I'll be interested.
Yep. But that's so like in end of January, it failed at that January gap down level from last year, right? It was one of the names that was weak day in and day out while the market was still pumping higher. So it was, to me, it's still, I know no one agrees with me, but I still think it's the tell for the markets.
So lower for longer.
I hope not. I hope this is where it stands, but I this is one I'll be obviously watching week in and week out, but the fact that it was weaker before anything else was weaker was a big tell in general.
All right, last one, and then we'll do what we're watching for the week. Tesla. Nick kind of went over Tesla a little while ago. Nick, you want to speak on Tesla at all?
Yes, again, like it basically retested its neckline. It's sitting on the 10-week, 50-day, whatever you want to call it right now.
Yeah.
I think 220 is your pivot if you don't have a current position. I mean, again, now it's kind of you basically have two pivots to play. You either have like basically 100, let's just say 100, or you've got 220. I think getting involved anywhere in between is kind of foolishness. I'd much rather be a buyer through 220 than necessarily trying to short it through 100, but that's just kind of me. I think if you are a super bear, or if you are a full-time bear, whatever you want to call it, I think Tesla, this would be where you'd want to be short as it retests that neckline.
Perma bear.
The 200-day, 40-week moving average. It's the first time it's basically tested the 30 and 40-week moving average since it kind of broke down last year. Kind of off of that level, like, what does it looks like, 270 to kind of 315 range. But I'm a long-term bull in Tesla. Even if it breaks 100, I would be saying all the way down to say what?
I was so hoping he bought SIVB. I would have been laughing.
That would be hysterical, but I don't think he's got the money to do that.
He only needed like 5 billion, right? It was insolvent.
Pennies on the dollar.
Yeah.
Guys, we've gone over. I appreciate your willingness to stay a little extra.
I could probably do this for another hour.
Yeah, well, some of us can't.
I know.
So what are we watching this week? Nick, go.
Auto Nation and Boston Scientific.
Boston Scientific.
Yeah, BSX. Both they look similar in terms of like their weekly chart.
They do.
Just in terms of kind of like a long weekly base, and it's just sitting right on top of it.
Yeah.
Right. The 30 and 40 week are curling up in Boston. I think that they're largely heart related things, pacemakers and all that kind of stuff. And I do think, I don't know. Either way.
GB?
Go ahead. Sorry.
I like Roblox.
Yeah, I do too.
Not for this week necessarily. It actually closed green on Friday, which is impressive in its own right. But I like Roblox and I like Beyond. Beyond Trigger is
we talked about Beyond a minute ago. Right.
Yeah. It takes out last week's high. This with a 40% short interest, it can definitely start pulling towards the earnings high.
So I was going to talk about SentinelOne as a position to watch. They have earnings this week, but there's rumors that they might be involved in the SVB. Not sure if that's just rumor or if that's fact. But the reason why I was going to watch it is you guys know I love cybersecurity.
Yeah,
Every cybersecurity has been up after earnings, so I kind of liked it coming into this week.
Palo Alto looks really good.
So I'm gonna go with Bug as opposed to Sentinel One,
Ooh,
which is the ETF for the cybersecurity space. And then I can't believe I'm saying it, but GP kind of hit it right off the nose. I really like Apple this week. I like how it's positioned. That's probably what I will be looking to trade at some point this week, whether it's tomorrow or later on in the week. I do not know yet, but I kind of like Apple in my trading because I've been trading the Qs, I've been trading the SPY, I've been trading Tesla, NVIDIA, and Apple. And if it's not broke, don't fix it. So there you go.
Can someone tell me how Intel was green on Friday?
I have no idea. I was looking at that too.
I don't get it.
Just
It's not even a safety. They cut their dividend by like 80%.
Wild update. 2 updates. I mean, you got 3 Wednesday, Thursday, Friday. That sucker went from low to high 8%. I don't know. I'm still
my only thought
AMD.
process on Intel is that there's just not enough sellers left anymore.
Yep. Hey guys, let's do it again sometime. This was a lot of fun.
I will be out of town. I will be in Jackson Hole next Sunday, so I won't be around next week, but I will be back for the week following.
So as we come to quarter end, we always like to do a check-in with our guy Cookie. Cookie wants to be back on the show, and I'd love to have him. So cool. Cookie Monster, we'll try to arrange that with you. Nick, what day did you say you were leaving?
I'm leaving on Thursday.
Right, so Friday wouldn't work for you, but maybe next week. We could maybe do a Monday thing.
I'll be gone. I won't be back until the following week.
All right, so maybe we do. We don't need to work out our logistic plans, but thanks for letting us know, Nick. I'll try to figure out something with Cookie before we wrap up March. It's always great to hear his perspective and how he's looking at things. Just looking at his charts, I know he's liking these dips right here, so he's definitely more bullish than maybe I am. I'm not bullish or bearish. I'm just waiting and seeing. But yeah, that should be fun. So we'll get Cookie on the pod, whether that's a live that we do in the middle of the trading day or whatever. We'll figure that piece out and let y'all know. But thanks everybody for tuning in. This was a nice night for us. We had a lot of people. We went a little bit longer. So thank you guys. Nick, GP, appreciate y'all.
Thank you for always hosting.
Let's run it back. And it sounds like GP and I'll have to hold it down alone, but that'll be all right. We can do that.
Yes.
All right, guys.
I'll bring my computer if I'm available, and I will definitely try and make myself available. I just can't